Good morning, everyone. It is August the 23rd, 2016, counting down to the Labor Day weekend. Not this coming weekend, but the weekend after next. And really, that always to me has signified or marked the start of a new year, not January the 1st. And the reason for that is that people go to work. You've got full markets again. People are worried about finishing out the year, making their budgets, making their revenue projections, etc. There's a lot of extra energy there, and then getting ready for the new year. That's why I see it as the start of the new year. Today, the biggest event for Treasuries will be the 2-year auction. At some point, that will be supportive. It generally is a strong auction, but we have had 2- and 3-year auctions that have not been. We've got markets, manufacturing, PMI at 53.1. It doesn't usually impact the markets. We've got new home sales, could come in higher than forecast at 580. And Richmond Fed at 6. So the news focus is going to be new home sales, 2-year auction, and then the direction of the E-mini. And the E-mini looks like it's going to test the upper bound. So will the trading range hold there or not? So right now, resistance begins at 8. So first sell is 7 to 11, followed by 15 to 19. 29 to 01 is buy one. Got a B pattern. Looks like it's going to try to trade lower. We have a B pattern right here. Probably pretty good support at 01. And then 21 to 25 for buy two. Okay, moving on to the 30-year. Knob spread has come in. Resistance basically is that low right there at 4. So we'll make 4 to 8, number 1. 11 to 15, sell 1. 23, 27, sell 2. Again, in anticipation of a trading range because of the auction. Support right now 24 to 28. So 17 to 21, buy 1. And 5 to 9, buy 2. Looking at gold. Okay, we had 45.47 as resistance, so we're going to up that to basically 50, so 48 to 50. And then 54 to 56, sell 2. On the buy side, 40 to 42. We're pretty much where we've been. You know, we're trying to buy 35s to 40s and sell 50s to 55s. Market's likely to stay in a trading range until the end of the week. And our markets are, manipulated by the Fed, as other markets are manipulated by their central banks. And right now they put the markets on hold because Janet might say something new or different come this Friday. The Fed telegraphs their intentions. They leak through Fed governors, so right now, because of what Fisher said over the weekend, they expect a hawkish statement where the Fed can raise interest rates anytime they see fit, sooner rather than later, but dependent upon the economic statistics that drive those decisions. So nobody sees them raising interest rates before the election. That would bring the wrath of this administration. If you cross this administration, that old oft-quoted phrase, they bring a knife, you bring a gun, I mean, it's always brought into play. I mean, these guys play hardball. They do not screw around. 1375, sell 1. 114 even, sell 2. On the buy side, 25 to 35, buy 1. And 113 even, 113.10, buy 2. Okay, crude got hit pretty hard. It took out our 46. We went in liking the short side of the market last night, hoping to sell early strength, and it got whacked pretty hard. So we had a pretty strong feeling that the gap would close, and right now at 47.09, we definitely are dealing with a B, but you can see that volume is above time right here, so it's not the weakest B. So 46.50, 46.75. Market tends to pause when it's run a bit. Buy 1, then 45, 46 even, 46 and a quarter. Buy 2. The spill came from 47.35, so 47 and a quarter, 47.50, sell 1. 47.75, 48, sell 2. Like the short side of the market, I think we're headed to 45. Okay, the E-mini is testing the upper bands of the current trading range at 90.91. The issue is, can it bring it out, take it out? Yesterday we left the market. They couldn't break support, so we should retry resistance, and I think that's what we faced this morning. Then can we take out 91? And so the first sell is going to be 89 to 91. That is resistance. So you can sell failure to take it out. You can approach it any way that you like. Then I think if we get through that, depending on where we open, looks like 86. So if we add 88 to 10 to 86, that takes us up to the 95 area. So stops above 95, 95, 97, sell 2. Been a very slow grind higher because only traders are taking it up. Large institutions aren't buying. And we get the big hedge funds and those that can go short coming out. I'm 100% short. What that means is that all our funds that are allocated, or that can be, by structure, by investment objectives, allocated to the short side, are on the short side of the market. Okay, so we're at 86 and a quarter, 80, 82 buy 1. May take an 85 to get in. Hopefully we can buy it on the cheap. 75, 77 buy 2. And we'll put a question mark here in this say 84 plus or minus. So will the trading range hold? Don't be surprised if we go up against stops above 91 and the market stalls. They've done their job. They've gunned the stops. Now what? The trading community, exchange members, can push the market pretty easily 4 to 5 points. To take it more than that, they need outside help. And their objective isn't to take the market higher or lower. Their objective is to gun stops and to make money on, one tick to 5 handle moves. And that's by design. That's what got them there. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.